Introducing the investment calculator. This is a 100% free tool that you can use, and it lets you calculate your personal finances at one glance, lets you see how your capital grows over time, and lets you see also when you can plan for retirement. Stay tuned. My name is Hamann from H2 Intel, helping you succeed with investing. Okay peeps, I have developed a free tool for you to use. It's called the investing calculator or retirement calculator, and I would like to show you how it works and how you can use this for your advantage. Let's dive right in. So you can just go to the website h2-intel.com/tools, and here you will find the investing for retirement calculator. And this is a 100% free tool. And it's quite easy. You just have to put some inputs in, and as you can see, the tool already makes an assumption of some inputs. So you don't actually have to plug in all the numbers yourself, but you can just adjust it according to your needs. So here the input required is the monthly income in dollar after tax. If you have a different currency, it's okay, just assume it's in your local currency, and just plug in your monthly income after tax, and also a rough estimate of your tax rate. So I guess 45% in a lot of countries is a good assumption, maybe a little bit less. And you can see that, of course, on your income statement, paycheck from your employer, and the taxes you pay to the authorities. So then we have the living costs. So this is fairly easy. It's just the rent you pay monthly, all numbers monthly, for food and drink, car transportation, and so on and so on. So these are just the living costs here in the middle. And this lets you help categorize your living cost, that you know exactly in which bucket do you spend how much, and is it really necessary to spend that much in each bucket. So this is for you to control a little bit. And then we have at the bottom here also the annual investment return. So if we assume that this person who plugs the numbers in also invests their capital, their savings, then you can assume here an average return per annum, for example 8%, and you can display up to 30 years. Now the name and email, this is optional. You can still just hit the submit button and see the results. And but if you want a PDF report, then you need to plug in your name and email, and then you will get the report sent to your email address. So if we just assume those numbers are correct, and if we just hit submit button, then the tool will calculate basically the outputs. And for the outputs, we can see now the following. So here you can see some text explanation of all the inputs and outputs. And at the end, you see your outputs. So for example, you see your annual income figures, not only monthly, but now annualized, and also after tax, before tax, you see your tax expense. And this really shows you how large the actual tax bill is in the absolute dollar amount. So it's a quite large expense, and I think most people forget that this is quite such a high number. So this is a cost that you have, and that's why rich people, of course, will optimize these numbers, especially the tax expense, very carefully, because they know it's a large expense. Then you see also your total living cost per month. This number is just the sum of all the single living costs that you plugged in. Then you have an annualized number for the living cost. You have your annual income that is now not only after tax, which is one cost, but also after the living cost. So this is really after all costs that you have to sustain your current lifestyle. But this is basically your residual income or your savings that you can have. And here you also have the monthly figure, and then the savings rate. It's calculated by just the savings that you have. So this is basically your residual income after tax and living cost versus your after tax income. And of course you want to get this number up as much as possible, and you also get some evaluation here of this tool. So if your savings rate is below 35, which is here the case in this assumption, you just have to spend less. Then you have to check, of course, your living cost and try to optimize the cost if this is really makes sense in relation to the income you have. Or you have, of course, to increase the income. And if you increase the income and keep your cost the same, then your savings rate will go up as well. Then we have the tax rate evaluation. So here, of course, it's between 35 and 50. You can, of course, optimize your income. Here, there's the output that is below average in the US, which is around $64,000. And you can check this here if you click on this link, World Data Info, then you can see for every country the average income in your country. And I think it's a good guide to have if your income is good, or it's maybe can be improved a bit. But this gives you a couple of ideas. If your savings are good, if your taxes are good, if your income is good, and then also the investing return. So here we assumed 8%. This is of course good, but you can optimize this. And this gives you just a quick glance, just with a couple of inputs that you see in the outputs. Also already a good evaluation if you manage your finances properly. And if your income is good, savings are good, the total living costs are okay, and if your investing return is good. And then of course you have other interesting numbers, and here what you can see is basically the tool calculates the years it takes to double and triple your income, but also to double and triple your assets. And this is comparing always two cases. Case number one, you do not invest, you just save your money in the bank, and then you see how much basically savings you have accumulated over time, how your assets grow just by saving. Or the other case is that you have investments, so you put your savings into investment, and the investments can earn you additional capital that you would not have if you would just save. And then the tool sees, okay, if you have the investments and you compare it without the investments, just the savings, then how many years does it take to double your income from the investments and triple your income, and also the assets. So of course your assets will grow much more quickly if you have investments than without investments. And so here we can see it takes for the monthly investing income to be larger than just the monthly residual savings from your job. So these are just the savings number. 737 is basically just the residual monthly savings that you can have after deducting tax and living costs. So this is the savings number that you can have, and it's the same in every year, of course. And the investing income assumes that you use the 737 each month and invest it into assets. And after 10 years, your money, your investments, is making you more monthly investing income. Here, $854 compared to $737. And then you can see already 10 years, sounds like a lot, but here I think it's a very, very conservative assumptions made here in this example with the income and so on, tax rate and so on, that you can see already the power of investing, because it just takes 10 years and your money is making you more monthly income than your residual savings from your job, which is, I think, crazy. And it shows you that doubling of the savings or residual income is quite cool. And then you see also years it takes to triple your income. So then your investing income is more than 2 times your monthly savings. So of course your monthly savings are 737, and now it's not 854, it's now $1,600. So, and this is even after 15 years, and yes, it's a couple of years, but still, it will have a very positive effect. And then we have also the assets, not only the income, but the assets. So everything you own, these are the assets, your total capital basically. And here the years it takes until your investment assets outgrow your assets from just your savings. And this means you doubled your assets. So if you would just save, you would had $141,000 after 16 years. But if you invest your savings, you not only have the savings worth 141,000, but you also have produced assets from your investing profits of 148,000. And this means you doubled your assets, and you can just add up those two numbers. It also is very powerful to see that you can double your assets, your complete net worth, just with the investings at 8% with relatively low income numbers. Okay, and then to triple the assets, it takes 24 years, and then you see the assets are 425,000 versus only 212,000. Okay, then we have years it takes to reach 100k. So how many years it takes for your total assets with investing to reach 100k, and this is here 8 years, and to reach 1 million it's 30 years. Now please note that without investments you cannot make this happen. It's impossible. Only with investing you can make this happen, and it shows you if someone is dedicated and has a clear plan, and even with those numbers which are conservative, you can and will reach 1 million, even with conservative numbers and conservative returns. You know, it's not rocket science. This is the math, and the numbers, they don't lie. And if we now look at the graph, you get here an interactive graph where you can see now the number without investing. So it shows you the capital over time, over the years, over 30 years. And the red graph is basically the savings that you can have each year, and it sums up as a cumulative figure. So the total number would be after 30 years 265,000. This is just if you save your residual income after tax and living cost just in the bank, let's say. Okay, this is the total savings. Now this is of course without investing, but with investing you see now that your money is making you additional money. So in the first years the orange graph is the money that makes you money, so it's your investments. So you put your savings into investments, and your investments produce profits every year, additional income, additional assets. And this is the orange graph. And of course in the first years you almost did not notice it that much, but you can see how quickly this number becomes bigger, and as we said, in year 16 your assets are already doubled. And of course the blue line shows you then the total assets that you have with investing, and then compare the blue line with investing, which goes here up to 1 million after 30 years, compared to only 265,000. And even if you don't assume the 30 years, you know, even the 20 years, or even the 15 years, or even the 10 years, you see the gap here between the blue line and the orange line. I mean, it's significant, you know, 49,000 compared to 138, it's 100,000 more. With 100,000, you know, you already have a decent chunk of additional assets and income. You know, it's big stuff. Even in the small, in the lower number of years, you know, you cannot see it because the difference, you see the compounding effect of capital here very well. The power of investing, like this graph, goes up very exponentially the more time you spend, and that is why I'm emphasizing long-term investing. You know, this is the power of it, and you can capture it only if you are a long-term investor. And yeah, I think it speaks for itself, and if you see the numbers, and they don't lie. And here you see the assumptions, and now imagine what can happen if you increase the income a bit, if you decrease the savings a bit, if you optimize taxes a bit, if you increase your investing return a bit. You know, and for me, investing, and if I talk about investing also in the course Mastering Investments, it's not about only what to buy. You know, it's a holistic investing style, and that includes also your personal finances, that you optimize those numbers. And this is what I want to show you here, that this is a holistic game, and it's not only about what do I buy, and it has nothing to do with gambling. It's a systematic plan that lets you grow your wealth automatically with minimal effort, and you see the results can be quite profound even with those numbers. And now imagine if you don't get a 8% return. Let's just for fun, let's try this out. We just, let's say, double this number. Let's see what happens. And you know, 16%, yes, you cannot maybe achieve this for 30 years, but maybe you can. And also, even if you can do it for a couple of years, it's good enough, you know what I mean? But just see the small tweak, 16%. See, you cannot even recognize your little savings anymore. And even after 20, you're already at 1 million. You know, it's crazy. You see, after 5 years, you have doubled the income. After 8, you tripled the income. After 8, you doubled the assets. You know, 7 years, 100k, 19 years, 1 million. You know, and here in later years, you see, you know, the numbers are crazy. I know we humans, we cannot understand exponential trends and those growth rates, but you know, they are profound. And then still, I mean, you know, there are people that make these numbers now 32%. Just want to show you this is not impossible. Of course, for 30 years, this is quite difficult, but still, you know, you see, you're at 150 million. This is no joke. And then you cannot have this return 30 years. It's okay, you're not Warren Buffett. Warren Buffett, for example, has 20% for 52 years. You know, so, but this is still crazy. And even if you can get this for 10 years, you know, it's 500,000. 15 years, a couple of million. And then, yeah, there are people, you know, that make, I don't know, let's just 64. You know, it's highly difficult, but for a couple of years to make 60% return, it is possible. Maybe only for 1, maybe only for 2, maybe only for 3 or 5, but a couple of years, and you see, you do this 5 years in a row, 200 grand. And after 8 years, 1 million. You know, 8 years, that's it. I mean, is this impossible to do this for 8 years in a long period of time? Let's say you have 20 years left to save and invest, or 30 years even. Can you, in that period, have a couple of years with outstanding returns? I think you can. And if you look at this like that, then you can understand that, you know, the numbers, the pure savings, you know, you see this. It's basically nothing. And this is why rich people all invest, you know. There are reasons for that. And the numbers, you know, it's just clear. You need to do something, and no one wants to work for the rest of his or her life. And I think investing is good, even if you get the average returns. You know, it will increase your lifestyle, increase, I think, your happiness, your freedom, definitely. And I would just urge you, just use this tool. It's 100% free. And I think it shows very well where you can optimize your finances. And I think it can help you already out a lot to optimize the finances and also your investments. And I really hope this is helpful to you. Please use the tool. And yeah, I wish you best of luck and happy investing. Until next time.